What is going on, everyone? Welcome to CryptoNITE. I'm Phil. This is Rhett. We're here for episode 3. Let's get this music turned off. Again, welcome. Tonight's topic is DeFi investment strategies. We put some thought into this, and we could have gone in a couple different directions, but chose this one just to have some hands-on, some practical application of what we are talking about. But before we jump into it today, I just wanted to let everybody know we've started a YouTube channel. It's CryptoNITE, same way you see it in the stream here above our heads, and you should see our logo. We'd love if you could go give our first video a like, subscribe if you're interested in being able to revisit our content. It's going to be a long-term thing where we take our live streams and we upload them to YouTube so we can keep the conversation going and hopefully bring Ethereum, DeFi, decentralized exchanges, and all of these topics that we're talking about more into the mainstream. So with that, let's jump in. Rhett, do you have anything you want to throw out before we get going?
No, that was great. Glad to have some of you back again. Really appreciate your support and happy to chat through some of these things. And yeah, it'll be the same format again. We'll talk through some prepared stuff. It's going to be a little bit more hands-on, and then general Q&A after. But feel free to ask questions about the prepared stuff as we discuss it, and we'll notice those and answer.
Perfect. And we're going to do our best to look into the camera and look deep into all of your eyes. Realize that we're often looking at each other. We're looking at the chat, or today we might be looking at a screen that's got a DeFi protocol up, and we're going hands-on. So just want to make sure that we focus as much as we can on the camera, so it's a little bit more interactive. Great. So should we show our slide?
Yes.
Okay.
Single
perfect.
slide today.
So we've got a single slide. I'll sort of set the stage for our discussion today. So today we're going to talk about 4 DeFi investment strategies. Rhett's ranked them from low to high risk. The first one is stablecoin lending. After that, we'll move on to Ethereum, Bitcoin, and DPI, which is DeFi Pulse Index lending. Third, we'll talk about liquidity providing on a decentralized exchange or a DEX. And fourth, we'll talk about liquidity provision with leverage. So with that, I'm going to let Rhett take it away here and start telling us a little bit about stablecoin lending.
Yes. So this has come up probably, I think, in both of the last 2 episodes, but we just wanted to talk about it a little bit more directly, and we'll show what some of the yields are there too. So a stablecoin, as a reminder, is a cryptocurrency token that is pegged at $1. So it stays stable at the dollar. That's why they're called stablecoins. And lending stablecoins in decentralized finance is very similar to how you might think about a high yield bank account. They tend to be protocols where you can deposit money, earn yield on it in real time, and then you can withdraw at any time, just like a bank account. So you're not locking it in anything.
So just so we're crystal clear on yield, right? Yield is like when I've deposited $10 into a savings account and they pay me a small amount in interest, right?
Yes.
That's really what we're talking about with yield. I feel like oftentimes we don't really think about yield unless we're active investors because it's so low in our savings accounts. We see this interest payment for 1 cent. We don't even correlate it with yield, right? But when Rhett's referring to yield here, he's talking about, say, I've invested $10 of Ethereum in a protocol, and I'm receiving yield, right? I'm getting paid trading fees or some other type of interest, and it's oftentimes much more than the 0.01% you see in a checking account.
Yeah, that's right. Except in this case, we're not talking about Ethereum yet. We will talk about that, but stable coins in this case. So
that's right.
So instead of putting $10 in my bank, I put $10 in a cryptocurrency lending protocol. We talked at length about the lending protocols themselves, but this is for someone who's like, hey, I want to get better interest on my dollars than I get from my bank, but I'm a little bit skeptical of the future price of Bitcoin, or I'm worried about its volatility. Then this can be a great option. So let's pull up a couple of examples and just show, okay, here's some stablecoins you can lend in some real places and what yields are right this moment.
Yep.
So
Do we want to go Alpha Homora,
yeah,
Aave, or Compound?
let's do Alpha, and then we'll look at just probably Aave in addition.
Cool. Let's switch over to our display scene here.
So yeah, this is Alpha Homora, and this is, within Alpha Homora, if you go to their
zoom in here.
Yeah, it's great
For ease of viewing.
Alpha Homora has two sides, borrowers and lenders, and the lenders can find what you get in interest in this earn section here. So we're in the earn section. So you can lend Ethereum for 4%. These three here are stablecoins.
So these three, let me mouse over there. We've got DAI, USDT, and USDC. And also backing up just a little bit, we've touched on Alpha Homora a few times. We probably have a few new people in the chat. Alpha Homora is primarily a lending platform.
Yeah, lending and borrowing. Yep,
borrowing and lending. Mm-hmm. Perfect.
It actually gets at essentially Alpha Homora will be a good example because all four strategies can be done in Alpha Homora, from lending stablecoins all the way up to leverage yield farming, or leverage liquidity providing is what I called it.
Perfect. Is that the case for the other protocols as well? Would you classify Alpha Homora as sort of a one-stop shop for a new crypto interested investor?
It's a pretty good go-to place. But it's like Aave, Compound, and these others are also great places to look as well, depending on what you're wanting to do. So it just happens to be a really good example because it covers all four, and the yields and things are pretty good here. So
awesome.
So these three are stable coins. So you see interest rate right now, the APY ranges from just over 7% to 8.5%. These fluctuate like minute by minute based on the amount of lent DAI that is borrowed. So you'll notice of $52 million of DAI, 35 million is being borrowed. If it was more like, instead of 66% of the DAI being borrowed, if it was like 90%, then the interest rate would go way up. So the higher the pool is utilized, the higher the interest rate. And actually
that's really a demand argument, right? If 90% of it is being borrowed, there isn't much left. So demand is high and supply is low. So those rates increase.
Yeah, and there's some good incentive structure there where, hey, if most of this is getting borrowed, then yields go up, which means you attract in more lenders. So there's some good things there. This is actually probably the lowest I've seen stablecoin lending in at least 6 months. Typically, over the last year, it's been somewhere between 10 and 30%. But even 7% is insanely high compared to a normal bank account, right?
Yeah, that was actually the commentary I was going to immediately make. But Rhett, 7% is insane.
Yeah.
How can I trust this as somebody who doesn't know much about crypto? This seems too good to be true. Right? That's the first thing that comes to my mind.
Yeah, we've talked about this a few times too, but there are risks associated with doing these things, but the risks, in my opinion, are very low if you're using some of these trusted platforms like Alpha Homora, Aave, and some of these established ones. Their smart contracts are audited. They have a lot of usage over time, and they've kind of proven themselves. Alpha Homora, the total amount of money locked up in Alpha Homora right now is something like, here we can just go and look. It's over $1 billion right now being lent and borrowed in Alpha Homora.
Wow.
There's one other stablecoin on here, SUSD. This one's lower, 2%. But these ones are the more typically the stablecoins people kind of typically think of. So yeah, go ahead.
Oh, I was going to say, looking at it from a high level, Rhett's mentioned that these are trusted protocols, right? There are probably dozens, maybe more, of these similar platforms that you can borrow and lend. These are the biggest ones. They've been audited. That is sort of the major risk mitigant for you as a crypto interested investor, right? You want to go where audits are happening, where volume is high, adoption is high, and there's some transparency between the development team and the broader community, right? So,
Yeah.
so Alpha
Yeah.
Homora, Aave, Compound, these are protocols that are well known, well defined, and that an an already large number of people trust, but is growing rapidly.
Yeah. And there are other great ones too. We just didn't want to overwhelm you with a million of these. But let's look at Aave really quickly. Aave actually has even more. They have $15 billion being lent and borrowed in Aave. And the top four here are all stable coins: DAI, Gemini Dollar, USDC, and USDT.
Now, real quick, is this ranked by market size or amount borrowed? How do they rank this by default?
I'm not sure, but I think you can re-rank it yourself by doing
Okay,
something like this.
so you can rank by annual percentage yield,
Oh, it looks like it's
market
market
size.
size. Yeah. So it's default ranked by market size. It looks like maybe. I'm not sure.
DAI was at the top initially, so
Oh yeah.
interesting.
I'm not sure how they decide that. The yields here are a little bit lower. 2%, 2 to 3%. It looks more like 1% on SUSD. So Alpha Homora has tended to keep a higher interest rate lately. Than Aave. Aave's been around longer. It's super. I consider both of them super safe places to lend, but Aave even more so. And
Interesting. So we've got a related question here in the chat. What's the incentive to staking ETH, ETH, or Ethereum if APR percent is higher with DeFi? I did
mm,
want to briefly touch on that, right? Um, one of the key elements of what Red is talking about here is these are stable coins, meaning their value is pegged to the dollar. So if you get out of a position in ETH and get into a position in a stable coin, you are foregoing potential appreciation or volatility, really, appreciation and depreciation with ETH because you don't own it. You here in this case you own a stable coin, so you can get a high return, but the value of the underlying asset is very likely to stay pegged at $1.
Yep. Yeah. And Matt, that's a great question. Appreciate that. We'll touch on that one in a little bit as well, which is that's a more specific question about, hey, should I, if I have Ethereum, should I lend it or should I stake it? And we did talk about staking last time, but we'll get into that as well. And then you could say, hey, should I even, third option, sell my Ethereum for dollars and lend it? And that depends on your opinion on the price of Ethereum. Like, I don't want to be in dollars personally because I am really optimistic about Ethereum. So I'd rather lend Ethereum at a lower rate than stable coins because I believe more in Ethereum than dollars.
Great answer. Perfect. So we've checked out Alpha Homora, we've checked out Aave, we've noticed one of the interesting things is that the rates are actually quite different between the two platforms. Did you want to move on to Compound, or did you have more to say about Aave?
Um, yeah, let's look briefly at Compound, and there's others too, like Yearn and some others. So, but I just this is just a few quick examples. Compound is also huge. I think there's something like $20 billion being lent and borrowed in Compound, even more than Aave. And so the stable rates here, if you look at DAI here, it's about 2.7%. So again, it's lower. And I've noticed that of the big lending protocols, Alpha Homora has tended, at least over the last 6 months, to be consistently the highest yielding place to borrow or to lend. Sorry.
So, a question for you there is, what do you think drives the rate on Alpha Homora to be higher?
Um,
Because as an investor, that's one of the first things I'm wondering about. Clearly, Alpha Homora gives me a better return. What what drives that? Is that something I should be worried about? Um, what are your thoughts on the differences and how I should approach that as a crypto interested investor?
yeah, so I think part of it is Alpha Homora is a little bit newer, although I wouldn't call it a new protocol. It's a little bit newer than Compound and Aave. And so these will probably tend to balance more over time as there's more lending and borrowing happening. Maybe some USDC lending that's happening in Compound now will move over to Alpha Homora, and that'll balance out a little bit. Um, I think it's also partly that So both Compound and Aave are generalized lending protocols. I can use collateral to borrow DAI and do whatever I want with it. Alpha Homura is application specific, and the specific thing people are borrowing it for is a very high yielding thing. So people are willing to pay quite a bit to borrow
Okay.
there. Um,
Interesting.
if I just want to have 2 times Ethereum position, so I want to use Ethereum as collateral to borrow more Ethereum, and I do that on Aave, I may not be willing to pay really high interest. But the things people are doing on Alpha Homura tend to be high yielding, so borrowers tend to be more willing to pay higher interest. I think that plays into it too.
Okay, helpful. We have a question in the chat here that's very relevant to the overall channel. Is any of this stuff explained in your other streams? The answer to that is yes. We have a YouTube channel now, and episode 1 has been uploaded to the YouTube channel. If you go to YouTube and search CryptoNITE, the same way that it's spelled here in our stream, you will find our channel, and you can check out our first video, which is DeFi basics, cryptocurrency and DeFi basics. So that's somewhere you definitely want to go if you're looking for some more foundational things. But of course, over time, we will circle back to basic topics to reapply them to new episode content. So
Yeah, we're happy to re-answer the same questions.
exactly.
Yeah, both of the last 2 streams should feed into this. So Mindflux, if you watch the first 2 streams, they should give you a lot more insight here. But yeah, what we're talking about in this first basic part is, hey, if you want to be denominated in dollars, but you want to lend in DeFi and decentralized finance protocols instead of at your bank or have it in a bank account, you can get much higher interest on it without much extra risk. There are some risks, but I think they're pretty small.
Perfect. That's a great answer. We have another comment in the chat questioning about whether the rates are higher because people are using it for their leveraged positions. It sounds like that's maybe a restating of what you mentioned, that they're borrowing on Aave for a very high yield asset.
Yeah, so people are using all 3 of these to take leveraged positions, but Compound and Aave is usually just a leveraged ownership of an asset. Like I own Ethereum, I want to use that as collateral to get more Ethereum, and I have a leveraged Ethereum position. That's what I'm borrowing for on Aave and Compound. Although I could borrow for anything. I could say I want to use Ethereum to borrow and then just go buy a car or something with it, because they're generalized lending. In Alpha Homura, the borrowers are taking a different type of leveraged position. It's a leveraged yield bearing position. So instead of just getting leveraged exposure to an asset, they're getting leverage and facilitating trading on decentralized exchanges and getting paid for that. And they are pulling in pretty high yields, so they're willing to pay more. Yeah, so Milk Me Not, that's a good. Oh, and thanks for the link, Zerd Crypto. Really appreciate that.
Yes, thank you.
So yeah, so that's least risky.
So bringing it back up to the topics for today, right? That was an explanation about stablecoin lending, where, like Rhett said, you're denominated in dollars because these assets are pegged to the value of $1. So, again, a key difference there is I don't own Ethereum in this case. I own a coin that is going to continue to be valued at $1. And I'm lending that asset and getting a return for doing so.
Yes.
Sound good to you?
Yeah.
Perfect. So moving back to our second topic, the next lowest risk DeFi investment strategy you have listed here is actually lending Ethereum, Bitcoin, DPI, or some other crypto token.
Yes. And you can share that again if you'd like. So I think the reason why I listed those 3 assets specifically is Bitcoin and Ethereum are the 2 most established cryptocurrencies. And so there is a risk reduction associated with that. And DPI, which is called the DeFi Pulse Index, it is a market cap weighted index of a whole bunch of DeFi tokens with some inclusion criteria. And indexes like that also tend to be lower risk over time than a single asset. Um,
That's because they're diversified
yeah, there's
among a variety of assets, and they sort of track the development of the ecosystem as a whole rather than a single asset like Ethereum or Cardano or Bitcoin or some ERC20 token, right?
Yep, exactly. So if you're wanting to get exposure to cryptocurrency, when people ask me what should I buy, my first answer is always Ethereum. But if you wanted to buy a few things, Ethereum, Bitcoin, DPI are really good places to start. They're more established. There's some less risk there, and they've like kind of proven their use case more so than maybe some new token that launched today.
Yeah. I do want to step back and I want to just clearly define the term exposure. That's, you know, in my career, I was never exposed to that term,
Hmm.
pun intended. I was never exposed to that term until I worked in banking.
Hmm.
So I think, you know, in terms of the people that we have in our conversation today, the word exposure doesn't make intuitive sense. So can you give us an idea of how you would define exposure for a new investor?
Yeah, sure. Be happy to hear how you define it as well. But yeah, when I refer to that, all I'm saying is if you want to, like, if you believe that there's um, a future in cryptocurrency and decentralized finance, and you want to be able to benefit from that upside. So if in the same way, if I said, hey, I think that, the smartphone industry is going to do well on an ongoing basis, I want to benefit from that market doing well, then I can get exposure to it by buying Apple stock. So you see, okay, decentralized finance is kind of exploding, growing really fast, getting all this use and solving important problems. I want to benefit from that upside. That's how I define like the term exposure.
Okay, so in short, exposure is exposing myself financially to the volatility of a given industry or asset class, right?
Yeah.
So I buy Ethereum, and the money that I put in that Ethereum is at risk because it's a volatile asset. It can go up, it can go way down. We've seen massive price swings in Bitcoin, for example. It's a very volatile asset. So exposure is my financial exposure to those risks, but also exposing myself to the upside, right?
Yeah.
So I think the term was sort of born from the risk, the negative risk aspect, which is why it seems to have this kind of negative connotation associated with
Exposure,
it.
like, oh,
Yeah.
I'm naked to
Yep.
the
I'm
threat.
exposed to this thing,
Yeah.
but
But yeah,
exactly, it's the upside and the downside. It's you're being exposed to all of the volatility of the industry or asset class that you're interested in investing in.
yep.
So thank you for
Yeah.
backing up there. I think that will be helpful. But coming back to Ethereum, Bitcoin, DPI lending, did you want to take a look at the different protocols and show us a little bit about how this worked, or
Yeah, let's dig in, and we can actually just look in the same places because in all three of those protocols, you can lend stablecoins like we saw, but you can also lend the others. So Ethereum, you can lend, and you get right now 4.21%. This is a lower rate than I've tended to see as well. And but what I have consistently seen is that Ethereum lending rates are lower than stablecoin lending rates. Stablecoin lending rates tend to be notably higher than Ethereum. And I think that's because a lot of people in the space want to be denominated in Ethereum rather than stablecoins. And so there's more people willing to be in Ethereum and lend it. And you can even see the lending pool here. There's $340 million of Ethereum. There's $53 million of DAI. And so because so many people in the space are so optimistic of crypto, there's more people willing to lend there at a lower rate, but it's still like a notably high rate. Um, if you have 100 Ethereum in a year, you'll have 104 Ethereum. And if Ethereum also goes up in price, that those 4 Ethereum, the gains are amplified, right? So if you're going to own Ethereum, lending it here is a great thing to do. And then let's go look. So Bitcoin, what you'll see a lot of what's called WBTC because Bitcoin lives on its own blockchain. So in order to do decentralized finance things with it, they wrap it and bridge it in. We talked about that a little bit before, but this is an asset that represents a Bitcoin on Ethereum. So it's a 3.6%. And then,
See DPI there.
yep. And DPI, it's getting about just under 8%.
Relatively small pool there,
Yes,
though, with 2.7 million.
exactly. Yeah. So, yeah, this one has tended to vary a little bit more than some of the others because it's such a small pool. A single person could come in and push this lending rate up to 30%, just taking a single position.
Mhm.
That's harder to do with Ethereum. So,
Simply because there's so much lended. So
yeah,
a person would need to spend hundreds of millions to massively move the interest rate.
Yeah.
Where here, where the total pool is 2.7 million, somebody could borrow a million more, and suddenly the utilization would be 99%.
Yep, exactly. Exactly. When this pool first went live, it was even lower, and I was one of the earlier lenders. And I remember I deposited some, not huge amount of money, and just my own deposit like moved the needle a little bit.
There you go, Rhett, the DPI big dog.
Yeah, definitely not. But yeah, I mean, it was way smaller. Even at first, it was like it was like $100,000 was total at first, and then it's grown, but it's still. But yeah, Ethereum up here, yeah, there's $340 million lent and 176 million borrowed. So if you tried to single-handedly push that utilization rate way up, you'd have to borrow a massive amount.
We have a very related question here. Are your funds locked in for a specific amount of time, or are funds liquid?
They are liquid.
So you can lend and withdraw at any time.
Yeah, you could lend, and the moment it's deposited, withdraw. And the way you would do that, by the way, over here, so up at the top, you see this thing that says Connect Wallet. So you need to have a wallet. I use MetaMask, and you need to have some Ethereum in it. And you click there to connect the wallet, and MetaMask will pop up, and you can. So if I click this, actually, see it says, oh, you can connect any of these. This is one I use. So you'd click this and connect your wallet. And then here on the right, you just click supply, and it would tell you how much you had in your wallet. And you could say, hey, I want to lend all 100 Ethereum I have. That's funny. It's doing weird numbers because I have
Nothing in the wallet.
Yeah. And then here you would press confirm. And then you actually do two transactions. You do one that approves that you're willing to let the transaction happen. And then you do the actual deposit. So you'd hit confirm. That does a little transaction for a few minutes. And then you hit deposit. And then similarly, if you have some being lent, you hit withdraw. And then you say, I want to withdraw this amount.
Now, a quick question for you here is if
Yeah.
I've connected my MetaMask wallet and I've lent Ethereum, I should see my balance of Ethereum here.
Yes.
Is that correct?
Yep. And you'll see how much you've earned right below, right here.
That was my next question.
Yeah.
Perfect.
Yep.
So pretty simple, actually. Straightforward. Yeah. Connect wallet, click supply, choose the amount you want to lend, and confirm.
Yes.
And then withdraw it at any time.
Yes.
Pretty flexible, pretty interesting. Certainly feels a little bit different than traditional finance in some ways.
Yes.
But it's also kind of liberating, right?
One thing to note about all of these things is that when you interact with a decentralized protocol, you are doing a transaction on the Ethereum blockchain, and those transactions are that it's paid for in Ethereum. And so say you're coming into supply here, and the total amount of Ethereum you have is 10. You have 10 Ethereum. If you supplied all 10 and you emptied out your wallet of all its Ethereum, later when you went to withdraw, you wouldn't have money to execute that transaction. So say you have 10 Ethereum in your wallet and you want to lend basically all of it. Maybe you lend 9.5 or 9.7 of it or something. Leave a tiny bit of Ethereum in your wallet all the time, because that's how you interact with these. That's the currency of the Ethereum blockchain.
Now, if I understand this correctly, that is what's called a gas fee.
Yes.
So interacting with different protocols has a cost associated with it, and that cost is higher for protocols that are very trustworthy and used heavily, because the blockchain has a limited capacity, right? So in some ways, it's competitive in nature.
So yeah, I'm not sure if you meant what I think you meant, but let me clarify one thing. The gas fees will be higher um, based on two things: congestion of the Ethereum blockchain, so how many people are wanting to transact on Ethereum as a whole, and secondly, the complexity of the smart contract. But you won't pay more to transact on Aave than you would on some new Ethereum protocol, just because it's new and less used and trusted. Um, you will spend more to transact on Ethereum than you would on the DeFi being built on some other chain that doesn't have much usage,
Right.
because their networks don't have the same level of demand.
Okay, so that's what I meant by competitive in nature, right? The demand means I have to get in line behind all of these other people, and capacity is kind of limited, right?
Yeah.
So,
Yeah, there's some things being done to increase the capacity, and we've talked about that before too. We'll have a whole episode on that,
yeah,
but those gas fees should be coming way, way down um, over the next few months.
yeah, yeah, awesome. So, if you feel like we've satisfied the Ethereum Bitcoin DPI lending,
Hmm.
we can move on to the next investment strategy.
Yeah,
Let's
yeah.
do it. So, coming back to our slide here, um, the next lowest risk DeFi investment strategy that Rhett has listed here is liquidity providing on a decentralized exchange.
Yes. So this is higher risk than either of the lending options. We're going to talk in depth about decentralized exchanges in the future, but at a high level, if you're a liquidity provider in a decentralized exchange, you are putting your assets in there and allowing people, you're facilitating trading. So you put in two assets, equal dollar amounts of two assets to be a liquidity provider for that trading pair.
For example, Ethereum and DPI,
Yes,
which is the DeFi Pulse Index, right? I can put in $10 of Ethereum and $10 of DPI, and that allows others who want to trade between the two to use what I've supplied to execute that transaction.
exactly. And they pay you fees to do so. So if you provide $10 of Ethereum and $10 of DPI, every time someone makes a trade, you get paid a little fee.
I just want
And
to relate this to traditional finance, actually. When you are buying a stock, the exchange is profiting from that transaction, right? And so in the DeFi world, since the exchange as a centralized entity doesn't exist, you get to profit from that transaction.
yeah, yep. So it's really nice for DeFi users that I can make my asset more productive. Where if I own some Tesla or some Apple stock in Robinhood, it just sits there. I can't stick it in and earn yield on it as people trade against those assets, unless I'm a very wealthy person with some privileges.
Yeah. We have a question here from Matterhorn. What do you say to someone who says this is too good to be true? This seems wildly easy to make much more APR than your standard fiat bank. I do want to give just a short answer on that, and then I'll let you
Yeah.
add to it. The interesting thing about cryptocurrency is that it's a real divergence from traditional finance, and so in that way, it's almost it's about highlighting that you believe cryptocurrency is a system actually capable of succeeding, and what I mean by that is we're transacting in Ethereum. We're not transacting in dollars, right? So the price of Ethereum is wildly volatile. The future of Ethereum is something that's probably not even a consideration for most mainstream people. Not even something they consider. So as this comes out into the mainstream and becomes more well understood, I think things can change. But it's really about the credibility of the whole system, in my opinion, right? And we clearly are in the Ethereum camp, right? I'm in the DeFi camp. I believe that this system is going to uh, be successful. I believe that, like Rhett has stated before, that it provides some efficiencies, and and I'm willing to attribute real world value to the Ethereum blockchain that not every investor is, right? So that's one thing, and that's part of why returns are high, right? It's that it is riskier than putting my money in an FDIC insured savings account, right? Even though we as believers in DeFi don't necessarily view it to be extremely high risk, right?
Yeah. Yeah, and I think um, new markets a lot of times reward early adopters. People who are kind of forward looking about the internet, and invested in some of these at the time really small internet companies got received high returns for
Taking on that risk.
taking on the risk of an emerging industry, and I think that's happening here. So over time, I think some of the yields you'll earn in these various things maybe will end up converging between traditional finance and decentralized finance, but it may converge and settle at a higher level, which would be great.
Yeah.
But early adopters definitely, there's some risks that you're bearing. We've talked about some of those, and I think the risks are less than people realize, and so the bigger barrier is understanding. But as that barrier breaks down and more people come in, yeah, I think there will be a balancing out of the yield you'll get in various places. It won't be so imbalanced in 50 years, probably.
The other thing I wanted to say is that even in traditional finance, right, the returns for the bank are actually very high. Banks take our savings and they pool our savings and they lend them to different companies in the form of revolving credit loans, letters of credit. There's lots of different vehicles through which these companies access all of that capital. And banks like to refer to it as financing the economy, right? What we usually don't have any insight into is how exorbitant those fees are and how much profit banks as a lender of our money really make. And the truth is just none of that is shared with us.
Yeah, very
right?
little.
And so even in a
Some.
situation where we've seen this adoption and convergence, because the centralized institution will never exist, in my view, there will always be a greater return than a savings account because there isn't an entity there who's going to siphon all of that return. You are the bank, and as long as there's demand for the asset that you're lending, I think that the returns will consistently be higher than a savings account.
Yeah, I think there's some truth to that. I think, JP Morgan, for instance, is in like the top 3 most profitable companies in the US, I believe, last I checked, maybe top 5. And so that all of that profit that JP Morgan is taking, if that was democratized amongst the lenders, the people who actually own JP Morgan bank accounts, then they would have higher yields.
You would be making
So,
more than 0.01% in your checking account, right?
yeah, so removing the need for the centralized intermediary, which is what JP Morgan is probably part of the reason why these yields are higher as well.
Exactly.
Yeah, so getting back for a minute into the liquidity providing on decentralized exchanges. So we know what it is. You're providing equal amounts of 2 assets, and people are trading against them, and you're getting paid trade fees.
And you don't have a DEX up here to visualize it, do you?
I don't, but Alpha Homura connects to DEXs. So they show here's some yields you can get doing synthetics and Ethereum on Uniswap, which is a DEX.
So just to recap, right? Those are the 2 assets there. So if I wanted to provide liquidity for SNX and Ethereum, I'd take $10 of each, deposit them into the pool, and these are the yields that I could see, which,
Yes.
Right off the bat, you can see that they're significantly higher than just lending.
Yeah. And there's some a lot higher even. Which one was I saying was really high? So this one's 44%, 80% here on this SNX ETH. So this is the same pair we saw above, but it's on a different decentralized exchange. It's on Sushi Swap rather than Uniswap. It's a competing DEX. So you can see yields are higher here. Yeah, 76% here.
But all is not well and good with a super high yield, right? It's not just, hey, this is exactly where I want to put my money, no risks, right? There's a lot of risk associated with the increase in this yield.
Yeah, so you get a higher yield, but your risk is that when you're a liquidity provider, you are required to maintain equal dollar amounts of the two assets. So I put in $10 of SNX and ETH, and I'm a liquidity provider. If one of those drops a ton in price, then you're rebalancing into the less valuable asset. And so if you're wanting to be a liquidity provider, one of your basic assumptions, and we'll get into this in a lot more depth at another point, but one of your basic assumptions is that the two assets won't diverge significantly in price.
So just to recap, your assumption should be that if we're talking about DPI and Ethereum, your assumption should be that Ethereum or DPI won't go opposite directions when it comes to pricing.
Yes.
Like strongly, right? Yeah. If they diverge, aka DPI drops significantly or Ethereum goes way up but DPI doesn't, right? When there starts to be a big difference there, that's where that rebalancing actually takes place.
And it hurts you, yeah. And they'll call it impermanent loss risk. I call it price divergence risk. So if you had the belief that you said, okay, there's two assets, Ethereum and Bitcoin, and one of them is going to be worth hundreds of trillions and the other one's going to zero, but I don't know which one. You wouldn't want to be a liquidity provider because whichever one went to zero, if you were right, you'd be rebalancing into that asset as it went to zero. Instead, you would want to just buy each and hold and lend them if you thought they would diverge in price. And you're like, oh, well, I don't know which one, but one's going to win big.
Yeah.
I'll own them both, lend them, but I won't liquidity provide them.
Where I won't be forced to rebalance into the one that gets left behind.
Yes. So liquidity providing gives much better yields. It can give much better yields, but it brings the price divergence risk. So when you're a liquidity provider, you're betting that over the period of time you're providing liquidity, the two assets will not diverge significantly in price. I've said that like multiple times, but that just to reiterate.
Yeah. So we have a comment in the chat. You make it sound like the lender has to actively balance their position, which isn't the case. Let's just make that crystal clear. That is an automatic process. You deposit equal dollar amounts of the two assets into the protocol, or into the lending pool, I should say, and the protocol will automatically rebalance you to keep the US dollar amount of the two assets similar.
Exactly. Yeah, the protocols work in such a way, and thanks for pointing that out. Yeah, when I said you have to keep the two in equal, the protocol itself rebalances you. Yep. That's how most decentralized exchanges are called automated market makers, and that's just in the math behind how the automated market maker works. It just rebalances you and keeps you in dollar parity between the two assets always.
Perfect. So we've gone through that. I think we've set a strong foundation for liquidity provision. So maybe we should move on to our fourth DeFi investment strategy, which is very similar to the third one. We just talked about liquidity provision on decentralized exchanges, but a more risky way of doing the same thing is to provide liquidity with leverage.
Yes.
Right. So at a high level, leverage means I have taken what I have and I have used it as collateral to get more of something else.
Yes.
More of that thing or more of something else, depending on what I want, right? But I've leveraged myself. I have now taken my collateral and gotten more than I own on my own, and I'm using that to provide liquidity.
Yes, exactly. So one thing to just point out about liquidity providing fees is the fees you get are proportional to how much of the total liquidity is provided by you. So if you're providing liquidity between Ethereum and Bitcoin, and you're 1% of that pool, then every time someone pays a transaction fee, you get 1% of the fee they pay. So if I'm 1% of this pool, and I say, oh, I can actually borrow both Bitcoin and Ethereum, and now I'm 2% of the pool because I took a 2 times position, I just doubled how much liquidity provision fees I'm getting, but now I'm paying borrow rates, and the risk associated with price divergence is amplified.
Exactly. So there's multiple instances of increased risk here, right? Just leveraging is more risky. And then the leverage itself causes any price difference, price swing of the asset that I have borrowed to be amplified as well. So
Yep.
you run the risk of diverging token prices to a greater degree, depending on how much more leveraged you are.
Yep. So even more so than in liquidity providing, if you're doing liquidity providing with leverage, you're making a strong bet, generally speaking, that the two assets won't diverge in price. And I'll just give you a personal example. So I've used Alpha Homora to do leverage liquidity providing between DPI and Ethereum. And
Okay.
I've believed personally that DPI and Ethereum would correlate in price. And so I was comfortable with that risk. And what's interesting is I was a liquidity provider there before this market meltdown that happened a couple of months ago, and was earning, I don't know, 50% yield on that pool. And when the market melted down, my yields went up actually to over 100% because people started trading a bunch. There's a lot of frantic trading on exchanges. So my earnings went up and my debt ratio didn't even budge. So the market melted down and then it came back up and then it melted down and it did that and then kind of settled a little bit lower a few months ago. And my debt ratio didn't budge because I happened to be in two assets that maintained correlation. Whereas if you had been a liquidity provider between Ethereum and a stablecoin, those diverged. Ethereum dropped relative to USDC by half in that period. You would be a lot more at risk of getting. Anyone who was doing that at the time would have been a lot more at risk of losing money. So it can be. This one can be a lot more risky. But if you're really careful about the assets you're choosing and they happen to be highly correlated assets, the risk can be less than it sounds like.
Right. One key element there is that assets can be correlated for periods of time and then become uncorrelated, right? So there is a great deal of variability on from a longer term perspective. Right?
Yeah. History of correlation does not mean future correlation necessarily, and so will DPI remain correlated to Ethereum? You can make arguments for and against, and my personal view is, on that one has been that they'll stay pretty correlated. So I've been in there, but someone who disagrees would want to stay out of that pool if they think no, these two things are probably going to go unhinged, where Ethereum's going to take off and DPI won't, or vice versa. And so so someone, for instance, who's a liquidity provider between Ethereum and a stablecoin, USDC, what you're implicitly saying if you're a liquidity provider between those two is, I believe that over this period of time, Ethereum's not going to go up or down a lot in dollar price.
Because USDC is going to stay the same.
Yeah. So you say, okay, if I believe that the market, that Ethereum in a year is going to be worth about the same Ethereum is now, being an Ethereum USDC liquidity provider could be great because you're earning trade fees for that year, and they don't end up diverging. But if Ethereum went to 100,000, that would not be great. So that's kind of what you're assuming if you're a liquidity provider, and then even more so if you're doing it with leverage.
That makes sense. So we have a comment here in the chat. It says, you still win if assets go up and diverge, just not as much as if you had held both assets outside the pool.
Yeah, so that is a good point. So let me clarify again. That's a really good point. So when you say, okay, the divergence of the prices of the assets, you lose money relative to just holding the two assets. So if they both go down, but they go down together, you wouldn't have lost money relative to the divergence of the assets, but you would have lost money in dollar terms. Total. But if one goes up 20% and the other one goes up 200%, okay, you still made money. You just made less money than if you had held them separately.
And the reason for that is because the one that went up 200%, the protocol automatically rebalanced you into the one that went up 20%. To maintain dollar parity between the two. So it's a unique mechanism that kind of affects how you should look at how different assets can appreciate, and it relates to assets that are otherwise unrelated. You could just hold the two separately without yield farming and make 20% on this one and 200% on this one. No problem, right?
Yes. Yep. Yeah. So that's a really good milk me not. That's a really good clarifying comment. You're right about that. So it's relative. You're comparing. If you're being a liquidity provider, you're saying, is this going to make me better off than just holding the two assets?
Yeah. So we have another question. When rebalancing, are there fees associated with that? I was going to answer, I don't believe so. Looks like Milk Me Not has answered for us, and I just wanted to let you opine if there's anything you wanted to say.
Nope, you don't get charged. It just automatically happens. That's just how these exchanges work. Is that it just keeps you in that balance, and there's no. It's not like executing some little transaction. The transactions when people are trading against your assets are what are effectively causing that. So no fees. The only fees you pay are gas, which is a little bit of Ethereum, to deposit and withdraw out of these liquidity pools. And that's money as a liquidity provider. That's money you're paying to just transact on the Ethereum blockchain. It's not money you're paying to the protocol itself. Like, you're not paying money to Uniswap to do that. It's a good question.
Yeah. So at this point, we've talked about the 4 DeFi investment strategies. Do you think it's a opportune moment to pivot over to Q&A?
Yeah, I think so. Yeah, and I'm noticing a couple of questions and comments that we haven't addressed yet because we were kind of in the throes of this. So yeah, let's pivot into that, and we can kind of scroll back and look at some of those.
Perfect. Awesome. So scrolling back, there was this question that you mentioned you wanted to get back to. What's the incentive to staking Ethereum if APR percent is higher with DeFi?
Yeah, so that's a good question, Matterhorn. Really good question. So you could say, okay, how do I put this? So lending versus staking, they do have different risk profiles. So if you said, hey, I trust my ability to do staking, and I trust the foundational Ethereum blockchain, and anyone who wasn't here last time, staking is a way. It's like the new way that the Ethereum blockchain is its security is maintained, and people who validate it through staking get paid to do so. So if staking yields are lower than lending yields, you might say, hey, if I trust these lending protocols as much as I trust the staking pool I'm in, then maybe you should go lend. So there's a trust aspect there. And these, I think they'll tend to balance out. Staking yields have varied and lending yields have varied. But if lending yields are persistently higher than staking yields, what's going to happen is people are going to pull out of staking, do some lending until that balances, or vice versa. If I was lending getting 4% and I could stake and get 20%, probably pull out of lending and go stake. So those will tend to balance over time. But I think there's some trust assumptions there. And then right now there's some liquidity assumptions where if you're staking, without getting into all the details, this won't always be the case. If you're staking right now, your Ethereum may be locked up depending on how you're doing it. Whereas if you're lending, it's not. So that's one of the reasons why you would think that staking yields right now might be a little bit higher, because you're bearing liquidity costs. Like, you're bearing a cost where you have lockup, where if I'm lending, I don't.
Right. Another aspect here is that, if I'm interacting with DeFi, I'm using these protocols, I'm adopting DeFi, but I'm not necessarily securing the Ethereum network, right? So if you are somebody who's very passionate about the Ethereum blockchain, getting into staking is a great way to support the blockchain while making a yield, right? So like Rhett mentioned, I've been hearing sometime early next year there will be a merger between the two chains, right? I don't know if that's the right way to say it, but
merger between the two ways of securing the chain. You could say.
Yes. So the proof of stake method and the proof of work method, which is GPU mining, is still they're happening in tandem. there will come a point where proof of stake will take over, and anybody who's staking is that will be the only method to secure the blockchain. So if you're very interested in being part of the effort to secure the Ethereum blockchain, becoming a staker is an excellent way to do that, because you will literally be validating transactions and receiving a a yield for doing so, right?
Yeah, so there definitely is a non-monetary aspect to it. I agree with that. Where if I have a lot of Ethereum and I want to support the ecosystem, maybe I say, hey, I want to support it by doing some staking, and I want to support DeFi by doing some lending, and I don't just go all into whichever one's giving me a higher yield because I'm trying to support the system. I'm trying to be a, like a what I view as like a good, helpful community member.
Yeah, I mean, there are definitely people who are interested in maximizing their returns who will go where the returns are highest, but there's also a strong portion of the community that's really about growing the overall security of the Ethereum blockchain, and isn't going to go all in on yield farming um, simply because the returns are the highest there right now, right? So
Yeah. Yeah.
there's a lot of good actors actually in crypto, and it's been very impressive part of this whole industry and community for me as I've gotten into it. Just the surprising amount of people who are really truly bought in to the vision of decentralization, of DeFi, of securing the blockchain, creating this global way of interacting with each other. It's really pretty awesome, actually.
Yeah, I agree
Typically,
with
people
that.
associate, in the mainstream, people associate cryptocurrency with like illicit activity, and if you're very involved in the community, you can see that there's a lot of really good activities happening.
Yeah, I agree. That's one thing I love about the crypto community is it's like mostly people trying to change the world for the better. That's like the majority of what people are who are both builders and users are just saying, "Hey, we want to build the world, build a better world and improve the world and, ideally get good investment returns at the same time." Matterhorn, earlier you had asked about like if someone asked if it's too good to be true, and then you said, "Is it like a parlay bet?" I actually don't know what that means.
Oh, that's right. I read that and thought we should clarify that, and I'm not sure. I'm not sure what that means.
Yeah, I think I've heard the term. Is that kind of like saying, hey, yeah, maybe you could clarify for us, Matterhorn. Um, but yeah, we were pointing out that emerging industries, it's like betting on two things to win. Oh, when you're doing liquidity providing is a parlay bet because you believe both Ethereum and Bitcoin will win if you're being a liquidity provider between the two. Ah, okay, yeah, okay,
It's a good question, right? I think one of the key elements here is that they don't necessarily have to win; they just have to not diverge too much, right? So they can stay if neither of them are appreciating, but they're both staying, whatever assets you're uh, yield farming, you'll continue to get that return, right? Which is a win, right? But in terms of the underlying assets, they don't necessarily have to both go up at the same rate for you to win, right? The returns are generated from the trading fees, and the risks come from the asset divergence.
yeah. Yeah, so if you're liquidity providing between two things and you think it's going to be a winner take all industry, you don't want to do it. Like I wouldn't have wanted to be a liquidity provider in this method between Facebook and MySpace stock, because as Facebook completely dominated, I would have been finding myself owning more and more MySpace,
Yeah, that's actually a really good
right?
example, right?
So
A real world example that illustrates how the two assets diverged.
yeah,
Nobody's going to argue that MySpace and Facebook didn't stay the same, or that MySpace won.
yeah,
MySpace was left in the dust, and if you would have been liquidity providing between the two assets, as Facebook goes up, your share of MySpace would have increased and your share of Facebook would have decreased to keep you at the same US dollar value, right? Dramatically reducing how much you're winning
yeah, yeah.
in that case.
Yeah, now let me point out one thing about this as well is that because you're being paid fees to be a liquidity provider, those fees will offset some amount of divergence. And so, if I'm liquidity providing between these two things and I'm getting a really high APY, I'm getting like an 80% APY, and then they diverge like 5% over a year, the fees I was earning way overcame that small price divergence.
Just bear
Um,
in mind that that price divergence caused you to own 5% of the cheaper asset, right? That's the way to think about it.
yeah, but you earned an 80% yield in fees on those assets, and that huge amount of yield overcame that 5% rebalancing, like automatic rebalancing. So, um, so you don't have to guess, you don't have to believe that the two assets will remain like perfectly pegged to each other, but if you're a Bitcoin maximalist and you think Ethereum's going to zero and Bitcoin's going to a million, that you don't want to be in this.
Yeah.
But if you're someone who thinks, oh, okay, I think maybe Ethereum will outperform Bitcoin a little bit, but I think they'll both go up relatively similar to each other within a band, then it's a great thing to do.
Yeah. So one really interesting question that just popped into my mind is if I'm providing liquidity for DPI and Ethereum, for example, uh, I'm receiving a yield, right? I'm getting paid trading fees. What is the currency that I'm being paid in? Because I've got these two assets. Am I being paid in one or both of the assets? Am I being paid in a stable coin? What do my returns actually look like?
Yeah, so there are some details here depending on which decks you're on, but um, generally speaking, you're going to be basically paid in the assets you're liquidity providing in.
Okay, perfect.
Um,
So that yield is made up of returns in both of those assets.
yeah, and in a lot of cases, i- sometimes the fees don't sit apart either from the position itself, and so just the value of the position will grow over time with fees. Sometimes they do sit apart, and then you claim fees.
Mhm.
Um,
That
so
depends. That's protocol specific, right? That depends where you're
yeah, and
lending.
there's some other details here where, like, for instance, there can be these incentives where, like, SushiSwap will say, hey, if you're a liquidity provider on this pair, in addition to trade fees, you say you're doing ETH Bitcoin, in addition to the trade fees, we're going to just give you some of our sushi token just for doing that. And then you'll see, oh, you're getting sushi tokens accruing over time, and then you have to go claim them.
Mhm.
And you could say that's part of the yield you're earning, but it sits apart from the trade fees themselves. So generally, the trade
Interesting.
fees are in those assets, and then you're getting a little bit extra sometimes if someone wants to incentivize you to liquidity provide for them. Um, so, um, uh, so Zerg Crypto, great question about gas fees. So,
This is something I have little experience with because I haven't transacted much as I'm trying to learn how I should begin
yeah,
interacting with DeFi. So I'm not the
yeah,
person to tell you about gas fees, but I think Red is far better qualified.
yeah. I'll give some thoughts, and then as far as like some latest numbers, I might even ask Cowboy, who just made a good comment, because he's a higher he lately been trading more than I have. I don't tend to do a lot of transacting. Usually, I'll buy some things that I believe in and hold them, and I do some transacting, so a couple of points. First of all, gas fees are a function of basically two things. What gas prices at the time are, and that's related to how much congestion there is, how much demand to use Ethereum there is, and then the complexity of the transaction. So if you go to what's called ETH gas station, and we can just pull it up actually.
Yeah, let's do it. I'll type it in for you.
Yeah.
ETH gas
Mhm.
station.
Yeah. So this will show right
Zoom in on
now
that.
what current gas fees are. So there's, you can have standard, fast, or trader. These are like, hey, I want my trade to go through extra fast, so I'll pay more gas. So gas fees right now, okay, is about 40 gas, 40 Gwei. Gwei is a small denomination of Ethereum, just like Satoshis are a small denomination of Bitcoin.
Are they equivalent? Is it the same number amount? I mean,
Compared to Ethereum and Bitcoin.
yes. Like as I think one satoshi is I don't know how many zeros it is. 0.0000, right?
I don't know. Yeah, I have
Okay.
no idea. I have no idea if they're the same amount, but that's what a Gwei is. Is some small denomination of ETH. So it's 42. I've seen it as high as like 300. I've seen it as low as like 10. This is a level I would consider relatively low relative to the last 6 months.
Hmm.
So gas fees are pretty reasonable right now. So if gas fees, so for any given transaction, if this 442 went up to 420, you'll pay 10 times as much to transact at that time. And you'll notice sometimes these spike, like when people have released some NFTs the last few days, it spiked to like 300 for like 20 minutes or for an hour. I don't know how long, for like an hour, because people were like jumping in trying to buy these NFTs before other people do. Anyway, so that's the first part. We can just go back to the normal camera, but the other part is the complexity. So the least complex thing you could do is just send Ethereum from one person to another. If I just sent Ethereum to Phil,
That wouldn't cost much.
Yeah, I don't know how much, but like probably like $1 or something really low. Probably $1, maybe less than $1. And anyone who's done it recently can correct me if I'm wrong, because I don't have like a perfect memory of this stuff. But that's a really non-complex transaction. If you go one step up, if you want to swap Ethereum for DPI on a decentralized exchange, swap one asset for another, that's also not super complex.
But it is more than just sending Ethereum to somebody else.
So sending Ethereum might cost you $1, a couple of bucks, and it doesn't care about how much you sent. If I sent you $10 of Ethereum or I sent you $1 billion of Ethereum, I'll pay the same gas to send it. If I'm swapping some Ethereum for some DPI on a decentralized exchange, I might pay more like $20. I've seen it higher, I've seen it lower. So again, it's irrespective of how much. So if you're wanting to buy $100 worth, then that ends up being a pretty big cut of what you're doing.
Right.
But if you're wanting to do $10,000 worth, it's not much. It doesn't cost you much. These fees, by the way, are soon about to drastically reduce. But then two other types of transactions. If you want to deposit into one of these lending protocols, I've done that more recently. And if my memory serves, the deposit was like less than $10. So you take, okay, I'm going to take my Ethereum, go lend it on Alpha Homora. To get it into there is going to cost you, at current gas price is going to cost you like $10 or something. If you want to be a leveraged yield farmer, a leveraged liquidity provider on Alpha Homora, that was the tier 4, the most risky thing. That's a very complex transaction because you're taking two assets, you're borrowing some more. You might have to do a swap because if I say, oh, I'm going to provide Ethereum and borrow more Ethereum, but I'm going to be a liquidity provider between Ethereum and SNX, then I take the Ethereum, I borrow it, then I swap half of it for SNX, and then I deposit it into this thing. That whole thing that's happening under the hood is quite complex. Those are pretty costly. You would pay probably at today's gas prices at least a couple $100 to deposit into one of those leverage yield farms. Cowboy might know more. If I'm off, tell me. But a couple $100 is what I would say. Now that's one thing that really excites me about these rollups that are like basically here that are gonna scale us 100x, and then sharding that'll scale us even more. Is that $200 it costs me to be a leverage yield farmer right now suddenly is $1, and to swap ETH for DPI would cost me less than a penny.
Yeah.
But that's kind of
that's because
high level.
These solutions, they're getting at the problem, right? One of the key drivers for gas prices is congestion. If all of a sudden we can do 1,000 times more, congestion is much lower.
Yeah.
Right? So it's as simple as that. Suddenly gas prices don't need to be nearly as high to sort of regulate the flow of people transacting on the blockchain.
Yeah.
So I'm also excited about that because, thinking about spending hundreds to experiment with leveraged yield farming sounds scary.
Yeah.
Right now.
Yeah. Yeah, they say with rollups and sharding, which are two of the scaling things, one's hitting like imminently, like this month probably. Well, they're kind of out with a little bit of stuff happening, but they're not out en masse. Between rollups, which is basically here, and sharding, that's coming over the course of a year or two, the two together is like a 10,000x scaling improvement. So it will probably be something in that range of price reduction. So you're like, okay, instead of paying $200, I pay 10,000 times less than that, however much that is. Not much. Now, there is this issue of induced demand where maybe it actually gets used more. So instead of reducing by 10,000x, it's only 1,000x. Still, it's a ton.
Because as it's cheaper to transact, it's logical to realize that more people will decide to to use the blockchain, right?
Yeah. Yeah. Um, let's see. Um, Matterhorn, you're right about the illegal activities. That's just a false narrative. And it comes from some history. The very early days of Bitcoin, it was used a lot in the Silk Road, but that's not what it's used for, like at all. Uh, Anyone who is doing illegal activities will use one of these privacy coins anyway, like
Monero.
Monero. Um, okay, Cowboy. This is a really good point. Not exactly a question, but a really good point that's worth touching on. Um, if you're a liquidity provider between Ethereum and USDC or another stablecoin, yeah, it dampens your upside, but it dampens your downside too. So you could say that's a way of 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 reducing my risk or volatility in the crypto market. Um, so being an Ethereum USDC provider for someone who wants to reduce their risk a little bit, um, that can make sense actually. And then there's some things that come into that with borrowing. When we talk about leveraged liquidity providing, if you said, "Oh, I want to do USDC and ETH, but I only want to borrow USDC and not ETH," and that has different effects on your risk profile as well. There can be a lot of complexity there. There's some really cool things you can do if you want to get into the details of it.
And also, when it comes to, I feel like a key point that I realized pretty early on as I got to know more about DeFi and as you taught me more, is that if you're an ETH bull, right? You really believe in Ethereum and what it's trying to accomplish. That anytime you get out of ETH, you're going against sort of your investment philosophy, right? So um, when you're transacting on Ethereum and you're dealing with stable coins, that's something to keep in mind, right? I just got out of this asset that I'm very bullish on into an asset that is pegged to the US dollar, which, whatever your opinion is about what the US dollar is going to do matters as well, right? So you can use these different strategies to dampen volatility, but at its core, anytime you're leaving ETH, you are you're essentially um, proclaiming to the world without saying anything to anybody, right? That I also believe in this other asset that I'm taking a position in.
Yeah, and that's okay. Really good functional markets allow people to bet for and against various assets. And so there's a DeFi protocol that's about to launch that I've been following, and it is a protocol that will make it easier to take short positions, so to bet against assets, and that actually ends up making for more functional markets. So it's good if there's a way. If I think Ethereum's going to go down, to be able to bet on that is good for the market. And then if I think it's going to go up, to be able to bet on that is good for the market.
Yeah.
And so obviously no judgment to someone who says, I just want a stable coin lend. Maybe like you're still participating in the ecosystem. You're getting a great return, better than you could get in the bank. Um, and your risk profile might be different. So, but yeah, those are some good points.
Great
Uh,
question.
yeah. Zerd Crypto thinking about putting some in lending. That's great. I'm doing some lending. And yeah, I think it's a really great place to be. I think
I think that's
that's
where I'm going to start.
yeah. The higher risk strategies come, like they come with higher risk. And so yeah, I think step one is always buy Ethereum, maybe some Bitcoin, maybe some DPI, but Ethereum's kind of my number one. And then step two is lend those assets. That's a really good place to start, in my opinion.
And one thing that's been weighing on me recently is, the potential for inflation of the US dollar in the coming years. And, right off the bat, I think, as we've learned about stablecoin lending, that's really a good way to sort of hedge against inflation. It's literally pegged to the dollar. There's a band of returns that you can get that is significantly better than a savings account. And as people are analyzing the markets and thinking, oh, are we going to have a crash or is something going to happen? What's inflation going to do? A lot of them are saying, oh, don't own dollars, right? Don't leave your money in a savings account. Put it in a hard asset or something like that, right? A lot of these people have no idea you can lend DAI and currently make a 7% return on Alpha Homora, which is a great hedge against inflation, right?
Yeah.
So
Yeah, that's a really good point. Because yeah, if inflation comes in at 5%, which is higher than people want, um, you have it in Wells Fargo, you get 0.5%. Your purchasing power is eroding. But if you have it in DeFi and you're getting 7%, at the very least, your purchasing power is not eroding; it's actually growing. That's yeah, really good point there. Um,
I just wanted to touch on Zerg's point here. It's already reflected in wages, home prices, and food. I mean, it's hard to argue in some ways, right? We recently built a house, and just looking at the appreciation of homes in the United States is kind of a little crazy.
yeah,
It's hard to believe that people are making are their the wages are increasing according to how these asset prices have been going up. So it's I mean it's
yeah,
tough, right? But DeFi gives you an option, like a really easy to interact with option for putting your money somewhere other than a savings account in US dollars, right? So it's that's exciting me a lot right now because I've been looking for, how can I hedge against what I perceive to be increased risk of inflation, right?
yeah, yeah. I think yeah, I have lots of thoughts on it on inflation too, or crypto, and probably won't get into all of them today. But yeah, I think it's a risk. I mean, we're seeing it, and some people, like the Fed, they think that it's mostly transitory, and I'm skeptical. Some types of inflation tend to be more sticky than others, and we're seeing some of those. But when you have that amount of dollar printing, it doesn't necessarily always translate into inflation, but I think it's very likely to at least translate into asset inflation, which is what we've seen a lot of asset inflation even just over last year. Home prices are way up. Stock market is up even though earnings were down. So the stock market got inflated, you know. Um, but yeah, we'll probably see other types of inflation too. Some types might be more transitory. I don't think GPUs are going to remain so expensive.
That's true.
And some computer hardware. I think a lot of that's driven by
Shortages.
supply shortages and stuff. Yeah, and those industries are so innovative that they've been having deflation over time. Um, I think I think tech will tend to be deflationary over time with some spikes. Yeah, so I think I could buy a GPU. I'm not gonna have to pay 10 grand to buy a GPU in 5 years or something.
Right. No, it's a good point, and it's another good reason to get into DeFi,
Yeah,
right? A lot of people, in the mainstream market, we hear this debate a lot, and it's always about Bitcoin because people are really just not clued in on Ethereum yet. You can go
yeah,
listen to a podcast on on the markets, on inflation, on finance, and people will talk about Bitcoin. They'll talk about Bitcoin, they'll talk about gold. They will not talk about Ethereum, and they certainly do not ever use the word DeFi, right?
yeah,
And that's literally the reason for this video series, right?
yeah.
Um, I was honestly shocked. Rhett invited me to a crypto lunch a few months ago, and I told him, well, I haven't really been in crypto for a while. I was doing some mining in 2018, 2017, 2018, and I had no idea about all of this stuff being built on top of crypto. Literally no clue. And when I learned about it, I realized that this is a whole new world out there. There are millions of people buying in, adopting these protocols. There's a lot of really cool stuff being built. And it's literally never talked about on any mainstream publication of any kind, ever. So,
And when it is, it a lot of times is talked about in a weird way. I saw a really funny post. I guess I think it's Goldman Sachs is they want to have a DeFi index ETF that they want to sell. So I was like, oh, is this going to be like the DPI? It's going to be like the DeFi Pulse Index. It'll have some Aave and some Compound and some MakerDAO. I looked at like the top components of it. The number one component is like Nokia, and then there's like Facebook, and then it's basically like a list of tech companies and some like credit card companies. And I'm like, okay, there's not a single DeFi thing in there. Zero, not one.
wow.
And not even like you could at least like include like, Grayscale Ethereum Trust. So you get some Ethereum exposure. No, none of that. And it didn't even have Coinbase. It's like
Wow.
like why are you calling this DeFi? It has nothing to do with what's happening in DeFi. To me, it's like false advertising. I actually tweeted
Fascinating.
about it, but it's like it's anyway.
I hadn't read that story. That's
Yeah,
really
so when they
interesting.
come out with their DeFi ETF, I would say if you're wanting DeFi exposure, don't buy it. If you're wanting some tech exposure, fine. But if you want DeFi exposure, DPI is a good place to go, in my opinion.
Yeah. Yeah. DPI is pretty cool. We've touched on this. I know we have some new people in the stream. An easy way to conceptualize DPI is to think of it as the S&P 500 of decentralized finance. It's made up of multiple tokens, multiple protocols, right? Really tokens, I shouldn't say protocols.
Well, yeah,
And
tokens that are associated with protocols.
yes, and as the overall DeFi environment um, accretes continues accreting value, DPI should go up, right? So in the same way that as the companies in the S&P 500 perform better, the value of the S&P 500 goes up.
Yep.
So it's pretty simple to understand in that way. It's a great way to get broad exposure to DeFi, to not to all DeFi, right? I would say that that DPI, because of those inclusion criteria, it's sticking to sort of a more well paved road in the world of DeFi, rather than getting out there to the Wild West where it's unaudited new protocols with relatively low adoption and hard to tell what's going on.
Yeah, yep. And as they prove themselves, then that will get included. So it's like the S&P 500 in that way too. The S&P 500 is the 500 biggest companies in the U.S. So if you have an S&P 500 index fund, you don't own any Coinbase. It's not in the S&P 500.
Right.
And that can be a good or a bad thing. I think it's mostly a good thing. But if you want some exposure to some newer things, you can do that in addition. That's my take generally.
Right.
There's this comment that Grayscale is doing a DeFi trust. I saw that. I'm interested to see what it ends up including. It's exciting. I hope there's more of that side of adoption of this stuff as well, because I think it really will facilitate a growth in the ecosystem personally.
I'm unfamiliar with Grayscale. Is that a financial institution?
Yeah, it's a way. So if you want to like buy Ethereum in traditional markets, say you want to buy some Ethereum in your 401k, um, you it's not going to be easy, or probably not going to you're not going to be allowed to take the money in your 401k and stick it in a MetaMask wallet and go wild in DeFi. I wish you could.
Hmm.
But instead you can buy some Ethereum basically through Grayscale, or you can buy some Bitcoin through Grayscale. There's some details there actually, like you're not buying the Ethereum itself. They are buying Ethereum, and then you're buying this Grayscale kind of wrapped Ethereum. And what's interesting is there have been times where the Grayscale Ethereum trades at higher prices than normal Ethereum, and sometimes at lower prices than normal Ethereum. So there's been some interesting kind of like um, interesting things there. But they have multiple trusts. They have Ethereum, they have Bitcoin, and then they have a handful of other crypto assets, and then they're adding to them all the time. Um, oh, that's cool. Milk Me Not. So he said or he or she said, looked like good stuff. Uni, Aave, etc. You get shares of their trust, which owns crypto. Exactly. So it doesn't always match the underlying Ethereum. It may go above or
Interesting.
below, etc. But it's one of the few ways you can get exposure to it if you're stuck in something like a 401k and you're like, this money I can't stick in DeFi, so you can do the Grayscale thing. Yeah,
Interesting.
those some good descriptions. Milk Me Not. Thank you.
I'll probably do some reading on that. I want to
Yeah.
definitely. I'd like to see these connections from DeFi to traditional finance, right, and how they're being developed, and
Yeah.
just how they go about it. It's interesting to me.
Yeah, and yeah, there's some details on like how a trust works versus an ETF, and it would be better if it were an ETF, I think, and I think Grayscale thinks so too, but they have not gotten approval from the SEC to do an ETF yet. So this is kind of it's better than nothing. There will be better things, but yeah, if you want to get some some Ethereum in your 401k, that might be a way to do it.
Okay.
Yeah.
Helpful. Thanks for adding that to the discussion, Milk Me Not.
Yeah, it's really helpful.
So we're at an hour and a half. We've got a little bit more time. We can go a little bit longer if there's any questions that you may have about cryptocurrency or DeFi or just general questions about this topic. Feel free to post them in the chat now. Rhett's reiterated this a couple of times. CryptoNITE is really about bringing this topic and understanding about these topics into the mainstream. So there was a point when I didn't know what a blockchain was, right? There was a point when I didn't know what DeFi was. So no question is too basic, right? And we're going to continue to reiterate that indefinitely, right? This is really about taking you from where you're at and getting you to the next level. And it's been great for me because I've been leveling up rapidly, right? As I've started listening to the Daily Gwei, for example, I've begun investigating these DeFi protocols and learning more about them. I've engaged with Rhett on Twitter, which if you haven't followed Rhett on Twitter, I'd strongly recommend you do so. I'll put it in the chat so you can find him easily. Rhett's very active in the crypto space on Twitter, and it'll help get your feed reflecting more of that crypto news and developments. So give him a follow. It's been helpful for me to learn more about DeFi as well.
I appreciate that. I think there's way better people to follow in Twitter than I, but I follow a lot of them, so that can be helpful. If you're kind of newer to the space, and we've started to put together a list of like here's worthwhile podcasts in crypto and Twitter handles, etc. Like Vitalik Buterin, he's a great person to follow on Twitter. He's not super active, but everything he posts is amazing. He's legit. I want to make one other quick point here about the Q&A. We also really appreciate some of the clarifying comments, and even some of these were like, well, you're explaining this like this, and it's really like this. We appreciate that feedback and also those clarifications, because like on the liquidity providing, yeah, I was explaining it in a certain way that made it sound like I need to go in there and maintain my balance. That was an attempt to keep it simple, but we both really appreciate those sorts of like if we're saying something and you think I kind of see it a different way or I disagree or whatever, happy to hear those opinions.
Yeah, and really CryptoNITE is about having a conversation. So
yeah,
as more people join, as the conversation starts picking up the pace, we aren't going to be able to address every point made in the chat, and that's okay, right? Really, I'd love to see interactions happening in the chat where someone poses a question and another viewer has that information and can answer that question.
Yeah,
like, that is invaluable. And
we've
that's
been seeing some of that today.
Exactly, and that's the broader goal of CryptoNITE, right? Connecting people who are interested in learning more in a learning environment. Staying high level where we can, going deep where we need to, exploring these topics in greater depth over time, talking about new developments, just overall helping to educate anyone who's interested in cryptocurrency. And grow in knowledge, grow in community size, grow in activity, just to really to provide value, right? This is providing an incredible value for me. For example, I'm newish to DeFi, a couple months at this point. I literally didn't know it existed prior to Rhett inviting me to Crypto Lunch. So as I've learned more, I've gotten more and more excited about it. I'm excited about the future of DeFi, and I hope to be able to pass that excitement on to anyone who's looking to learn. So.
Yeah, yep. And yeah, we would love to have people of all kinds. We're hoping to we're trying and hoping to make it simple and accessible enough for anyone who's not already kind of deep in crypto. But it would love also more crypto savvy people too. There's a few here that obviously have a lot of crypto knowledge, a lot here too, and we appreciate you guys being here, and we want to make these positive for you guys too. So
it augments our discussion. greatly to
Yeah.
have you participate in the chat and to add to the discussion. So
Yeah.
really appreciative of that.
Yeah. Matterhorn has a really good question here. Just for fun, what's your price prediction for this time next year for Bitcoin and ETH?
Rhett loves answering this question. Just kidding.
I tend to, especially in the short term, I tend to be less, on the whole, I tend to think less about price, and I tend to try to approach it like I would call it like more as an investor and less like a trader. So like when when ETH fell recently from what 4,500 down to like a little less than 2,000, I was just like, okay, I'm just gonna keep buying for 5 years anyway. So I just bought some more, and I'm like, I'm happy to just keep putting money in over time. That said, my price prediction for ETH this time next year would be something like $20,000 per. So it's about 10x what it is now. No. Wait, yeah, 10x what it is now.
10x from 2K. Yes.
Yeah. So 20,000 per ETH is what I would guess it'll be this time next year, personally. Um, Lots of reasons for that. I
This
think,
is not investment advice.
yeah, short and long term DeFi and NFT and all these other like ecosystem adoption, all that adoption, that I think that will drive upward pressure on Ethereum. And then there are three major things that are going to end up making Ethereum more scarce. So Ethereum is about to become a much more scarce asset. At the same time, demand and use of the blockchain, Ethereum blockchain, explodes. So I I personally, would be surprised if it wasn't 20K this time next year, or maybe even more. Um, Bitcoin, what do I think Bitcoin will be? I'm not a Bitcoin hater, and I own a very small amount of it, but I don't think about Bitcoin as much. And let's see, Bitcoin, what is it at right now? Like 35 or 40K or
I
something?
think it's around 40 right now.
Um,
Let's take a look.
Bitcoin price is,
Just
yeah,
under 40K.
right at 40 basically. So, okay, so if I think Ethereum's going to 10x in the next year, my guess is that Bitcoin goes up, but by less. So maybe ETH 10x's and Bitcoin 5x's. That's what I would guess. How about you guys? What do you guys think? What are your price predictions? And what's yours?
I haven't sat down to make a price prediction, and there's a reason for that. Up to this point in my life, I have really viewed crypto as separate from my finances, right?
Mm.
I'm still doing a lot of the traditional things that I should do to be financially independent.
Mm.
Um, I'm getting to this point where I think I'll bring crypto into that equation, because over time, obviously, I'm seeing what everybody else is seeing. There's adoption. There's the technology is good, right? When it comes to the upgrades to the blockchain, like all of that is getting very exciting, because I was very into cryptocurrency early on in the Ethereum days when Ethereum first, went from a couple dollars to $60, and there were multimillionaires made overnight, dozens and hundreds of them, probably thousands, maybe, I don't even know. But um, at that point, I saw so many altcoins that were absolute trash, right? That I really, it was hard to believe in the ecosystem as a whole, almost, because many of those coins just did nothing,
Yeah.
right? And then the ICO craze happened, and a lot of the ICOs did nothing. So Ethereum remained consistent. Ethereum and Bitcoin remained consistent through that time, and I owned them. I had them for mining, right? And I was holding them, and I believed in them, but I didn't feel like, hey, I should do this. Like, I should really treat this like reality. Like, I should bring this into my day to day and make this my future financial independence strategy, right? So like I said, I'm moving towards that point as I learn more about this, where I'm thinking I'm going to be more active in my participation in DeFi and transacting in the blockchain. I'm weirdly risk averse, and so it's been hard to even touch the crypto because of fears about, okay, how do I what do I need to do to stay compliant with regulation, where it's kind of hard to even know what the regulation is at times. But if I had to guess, I feel strongly that um, the from a miner perspective, right, uh, becoming becoming a proof of stake blockchain is going to virtually eliminate the sell pressure from miners, and that's a lot of pressure right now.
Yeah.
Just EIP 1559 is going to reduce that somewhat, right? And as the sell pressure, you can see if you want to relate Ethereum and Bitcoin, which they could be way less related than people think, but Bitcoin halvenings have had a good a positive impact on Bitcoin price as the sell pressure goes down from the miners. So
Yeah, Bitcoin halvenings, by the way, that's reductions in Bitcoin minting, reductions in what are called block rewards. Yeah, but yeah, so like you're saying, Ethereum as it's blowing up in use, it's like oh, EIP 1559, which goes live first week in August, I believe.
yeah, it's
That
coming up.
that will make it so that part of the money you pay to transact, part of the gas you use to transact, you're asking about Zerd crypto, part of that just gets burned and destroyed. So the more demand for the Ethereum blockchain goes up, the more deflationary the asset Ethereum becomes. So that really aligns the incentives of the system, and we can get into that at some point. It's a really good thing. And then as they switch from mining to staking, block rewards will reduce significantly, and the people who they're given to will have less reason to sell. Miners tend to have more reason to sell than stakers because it's so costly to mine. If I have a warehouse full of GPUs
I
and I'm
spent hundreds of thousands to buy that,
yeah,
right? So I need to recoup those costs.
yeah, maybe I'm spending 10 grand a month in electricity, and so it's like, well, how am I going to pay my electric bill? I'm going to sell some of my crypto. Even if I'm really optimistic of that crypto, I have to sell some to keep the lights on. Staking is such low power usage, such low compute usage. The people who are getting those rewards when it switches all to that won't have as much reason to sell. So those kind of three things together, where some gas will be burned, stakers will have less reason to sell, and then in addition to that, block rewards themselves will shrink pretty significantly. The amount of ETH being rewarded to miners is much higher than the amount that will be rewarded to stakers, and there's some good reasons for that. um, those three things together are going to make it a really scarce asset. At the same time, it's becoming like insane adoption. Like
Due to those blockchain upgrades, right? Where gas prices go down, so I have more incentive to transact. DeFi continues to grow. The transaction speeds increase. Like all of those things they bode super well for the project as a whole. I
yeah,
agree
yeah,
wholeheartedly.
yeah, totally.
Like I think I'll join Seawalker and say that I think that by this time next year, still a relatively short time horizon, right? I I could see 10K, but I feel like deep down, I realize that we could see a lot more than that. Like there's a scenario, a possibility that we could see a really, really high Ethereum price as these upgrades come into effect, as the economics of the Ethereum marketplace shift with the ending of mining. It's not make or break. I think Ethereum has already made it, but it is transformational,
Yeah,
right? The next year is really transformational for the blockchain, for DeFi, right? If you think about just in the reduction of fees, right? If I don't have to pay $100 to take a leveraged yield farming position, hundreds of dollars, I should say, like that massively changes the economics for me as an investor. I think it makes it much, much more likely that adoption will skyrocket. And so there's just a lot of good things happening. It's really cool to be part of this, honestly. Um, if you feel like you missed out on the internet, the more I learn about DeFi, the more I feel like I'm in early on something revolutionary like the internet.
yeah,
Like it's really pretty awesome.
yeah. I agree with that. Um, these are some good price predictions. So Matterhorn says 6K next year, but I sure hope you're right. 6K is a little less aggressive than my price. Seawalker, 10K. That's good. Um, yeah, both of those are good predictions. So Zerg Crypto actually has a really good question here that I want to address. So he says ETH doesn't have a limit on how much can be mined, but it just becomes harder and harder, correct? That seems to be part of the reason why it becomes scarce. Um, ye, um, yeah, so right now there is like an inflation rate on ETH. I mean, Bitcoin has one too. Like there's a certain amount of new Bitcoin minted relative to the
Every
total,
block.
yeah, relative to the total Bitcoin supply. And you can say it's X amount of yearly inflation in the Bitcoin supply. And then that inflation eventually goes to zero for Bitcoin. So for Ethereum, it was just set at, it was like something like 2% for a while. When they moved to proof of stake, the 2% will drop to something like a 0.5%. It's really low. Maybe someone here knows the exact number, but it's the inflation rate drops a lot. And then depending on how much the blockchain is being used, the gas burn from EIP 1559 that comes August 4th, the gas burn could offset all or even more than all of that newly minted Ethereum. So some people think ETH could go deflationary, where every block you're minting 10 ETH and burning 12, then that means total Ethereum supply in the world is slowly declining over time. And so on it'll depend on a few factors. But there's this thing you'll see sometimes, especially people who are kind of anti-Ethereum Bitcoin maximalists. You'll see on Twitter they'll say stuff about like, oh, Ethereum's infinite supply because they don't have this. Hey, we're going to stop mining it, minting at this point. And infinite supply is untrue. Uncapped is not the same as infinite. It may actually, there may stop, the Ethereum supply may stop increasing long before the Bitcoin supply does. It probably will. And without getting into all the details of it, it's more secure and better for a blockchain to have a system where you still have block rewards and they're offset by burn, gas burn, like I'm talking about with EIP 1559, than to just stop minting eventually. It's potentially problematic for the security of Bitcoin to eventually do away with all block rewards. So,
Is that
um,
due to centralization risk
well,
at that point?
it's due to block rewards give kind of like a more constant fee that is being paid out to miners, and then that added on top of that, which can be a lot or a little, is the transaction fees. So having that baseline fee being paid to miners keeps miners mining. And what you've already seen with Bitcoin actually a little bit is sometimes when usage drops off, you have miner capitulation where a bunch of people will say it's not worth it to keep mining and they'll shut down. That issue of miner capitulation where people stop mining and so the chain becomes less secure can grow more extreme when you get rid of that baseline altogether.
Right.
So Ethereum's I thought is like, yeah, we don't want to just mint into an infinite supply, and we're not going to. But what's better than to eventually get rid of that baseline, and then you have more volatility in miners' fees. You keep the baseline, and then you have an offsetting fee burn. That's probably more detail than almost any of you care to hear.
That's
Sorry.
actually that's actually really interesting. I had never even talked about that topic before. So thank you, CryptoNITE. Um, yeah, awesome. So just to directly address, right, in the current proof of work um, blockchain security method for Ethereum, Zerg, it does become harder and harder over time because since returns are positive, right, there's economic profit to be made by mining. There are more miners joining the network. The more miners that join the network, the higher the difficulty becomes, and everybody who's already in the network becomes a smaller share of the total mining power and get less rewards. So um, that's only true for the current environment.
It's true, but it also has nothing to do with scarcity. So it is true that as more miners come on, it gets harder for each
Yes.
given miner to earn more because it gets more competitive, but it doesn't influence scarcity. So I just wanted to make that point.
Yeah, the scarcity is influenced by the fee burn that is about to be introduced with the IP 1559
And
and
block rewards going down with staking.
block rewards going down and staking. Exactly. So
Yeah.
less of that baseline block
Smaller
reward.
baseline. Vitalik has talked about this in a number of interviews, and it's the basic reason, one of the main reasons why the amount of issued ETH is going to reduce so much with proof of stake is that proof of stake is so much more secure. than proof of work, that you don't need to pay validators as much as you did before. That's part of why it's going to reduce so much. It still remains very profitable for stakers, don't get me wrong, to do staking, because they can make an even more secure blockchain while having less overhead expense. So it's like,
Yeah.
okay, we don't have to pay them as
It's
much.
easier. The barriers to entry are lower for stakers versus miners.
Yeah. Matterhorn has a really good point here. Transformational, but I'm worried about the heavy-handed governance of the world will try to maintain power and strike down crypto. We've seen that with China. I hope that the US has enough adoption fast enough that, you know, heavy-handed US government is disincentivized from trying to shut it down, And I know Elizabeth Warren, the senator, has been saying some negative things about crypto, and a lot of the things she's said that's negative is comes from a place of ignorance, actually, which is unfortunate.
Bit disappointing, right?
Yeah, very very disappointing. But if we can get enough adoption fast enough, then hopefully, there it would be too unpopular. Um, yeah, I'll be interested to see how that goes. This is information only the gods have known until now, Maxwell. I'm not sure what information you're talking about, but that's funny.
And we just got raided by Hateful Box, 12 viewers being added to our stream. Do you know what a raid is?
No.
So here's how it works. Hateful Box just ended their stream, and they had 12 people viewing their stream, so they clicked raid CryptoNITE chat, and that takes their viewers and brings them to our channel. So it's
Oh,
really cool. Thank you, Hateful. I really appreciate it. Thank you, CSLR. It's awesome. This gives us a chance to talk crypto with 12 more people.
yeah.
So 27 viewers, that's a big deal, Maxwell.
Yeah, glad to have you guys. And yeah, we went through a whole bunch of different crypto investment strategies and a lot of Q&A, but any of the new people here that just joined, we'd love to hear thoughts or especially questions about cryptocurrency. Nothing's too basic is one of the big things here, is like, if you want to learn about crypto and you want to learn about decentralized finance, what's happening there, love to answer any questions.
Exactly. So we're in the middle of our Q&A, right? So, different questions have been posed. We've been talking about them. We've been talking about the future of Bitcoin and Ethereum overall. It's been a really engaging discussion, actually. So, I did want to go back and touch on some of the commentary in the chat. Let's see, Zerg talking about smaller governments have problems. We'll try and use it as legal tender. We have seen some of that with El Salvador, for example. But going back to the United States, I think one of the most interesting things is that here locally, right in Utah, there's a company called TaxBit that was recently started, and they landed a huge contract with the IRS to leverage their software to figure out taxes for crypto. So, that's a bullish indicator, in my opinion, that where if the IRS is willing to purchase software that will facilitate the taxation of crypto, I think that there's some evidence there that we can coexist, right? And I think that that's a good thing.
Yeah.
Obviously, the government always is going to come after their share, right? But I do think it's a positive thing for the path forward, if that makes sense.
Yeah.
So
Wyoming has actually shown an interesting approach, which I love, because they want to attract, we have a whole new industry being built in decentralized finance and crypto in general. And so Wyoming passed some laws and regulations that are very crypto friendly, and they officially recognize what are called DAOs, DAO, decentralized autonomous organizations. You can think of that as like the crypto decentralized version of a corporation. Like Wyoming recognizes DAOs as corporations.
wow,
There's been some crypto projects that have moved to Wyoming, and so and some countries are doing that too. I think it's Hungary said, hey, we're going to really reduce how much we tax crypto gains because we want people to come here, and some other places have tried to be crypto friendly too. A lot of places would love to have the next Silicon Valley built in their country or state. And I think this is a whole new emerging awesome industry. And so I would love to see Utah do some of that, like Utah should follow the path of Wyoming, and then, maybe more states will. And
Utah's involvement in crypto has sort of started and ended with Overstock and T0, right? Thus far.
yeah, I mean, that's a private company. What I was saying is I think Utah, the state government should try and pass some crypto friendly regulation and things. But yeah, overstock.com they've had some crypto ventures. Not what I would call decentralized finance ventures. Like they created a centralized exchange, T0. I think it's centralized. Um, but they're doing some things there. I think they created like a decentralized voting system, like a crypto, like a blockchain voting system that would be easier to audit and harder to like defraud. Like if you like for like a presidential election or something, then you could get adoption there. That'd be cool.
I have heard that talked about as a potential solution for fraud in elections, in countries that struggle with that,
Yeah,
or just to better secure any election, right?
yeah, it could go a long way.
So,
And you could do it in parallel for a few elections if people were distrustful or whatever.
yeah,
Um,
I did remember what I wanted to touch on with Zerg Crypto. So, um, with Zerg Crypto's question, one of the interesting competitors to the Ethereum blockchain right now is BSC, right? Binance Smart Chain, um, which if you step back and look at the structure of it, if I understand it correctly, it's 21 nodes, I think, and they're owned by the company Binance. So,
yeah, there's some obscurity. A lot of people think they're all owned by Binance.
mm,
They haven't confirmed that they necessarily own all of them. Like
yeah,
it's like maybe someone we delegated to owns this other one, but they kind of control the whole network. Yeah.
right. So, two key elements there, right? 21 nodes versus tens of thousands for Ethereum, is already one big difference there. And if you think about like a country, I've heard rumors that China's looking to launch their own digital currency so they can be in control of what's happening with digital currencies in their country. Uh, that's one of the real key elements there about Ethereum. Tens of thousands of nodes located across the globe is is awesome in terms of security, decentralization, difficulty to take over the network. It's really an awesome hedge against that problem,
Yeah,
right?
it's censorship resistant. There's an interesting thing in cryptocurrency, and maybe I kind of maybe want to show this infographic actually.
Yeah, let's do it.
Um, so uh, there's this challenge uh, trilemma. Blockchains have kind of what's been described as three goals, and it's really hard to meet all three at the same time.
If you want to show screen, go ahead and press that.
Just literally Google this.
Yep.
So this is the. Can we zoom in on this?
Yeah, let's right click and open in a new tab, then zoom.
So this is the blockchain trilemma, and Ethereum, more than any other, is trying to innovate in ways where you can get all three at the same time. It's really hard to be scalable, secure, and decentralized, and each one of those things brings benefits. So what Binance Smart Chain actually did, and I can see why they did it, Ethereum was getting expensive to transact on. Binance Smart Chain is basically an exact clone of Ethereum, and then they just gave up. Basically, they 100% gave up decentralization in exchange for scalability. So right here, they moved all along this axis, and they're like clear over here now.
Right.
They've got some level of security. They gave up some of that too, but they're like way up on the scalable side. Ethereum, with rollups and with sharding and with proof of stake, they're trying to get all three at the same time. That's hard to do.
Right.
So,
But it's also one of the reasons that Ethereum has become so valuable,
yeah,
right? Early on, when I was involved in mining, I would see these new currencies come up. Burstcoin was one that came up. The founders of Burstcoin, they were very, very critical of Ethereum. Like, we have much faster, we're much more scalable than Ethereum. And, in the early days, people would take that as fact and just buy into Burstcoin, right? But where is Burstcoin today? I don't even know, right? And it
Haven't
hasn't
heard of
even
it in
been talked
years. Yeah.
about in cryptocurrency forums for a long time now. So the fact that Ethereum has been focusing on these three things and making meaningful progress to all three of them is a huge competitive advantage.
Yeah. Yeah, I agree. And I think there's room for more winners than one. And I'm not trying to hate on Binance Smart Chain either. They made a trade-off. They made a very conscious trade-off, and it served some needs, and it comes with some downsides. Um, and there's a comment down here, by the way, about Polkadot. Polkadot's an interesting ecosystem, complements ETH rather than competing with it. I think I don't disagree with that, and I think that there are a few blockchains, Polkadot being one, Cosmos being another, and even Solana, that like they have emphasized interoperability enough, especially Cosmos and Polkadot, that yeah, that the three of them could all kind of grow together, um, and uh, they're not necessarily competitors to each other in that sense. So I would love to see Polkadot and Cosmos and these others like just contribute more to that. But these that you think of them as Ethereum competitors because they're not. Most decentralized finance is built on top of Ethereum. These are things like Ethereum, not things being built on top of it. And so people think of them as like Ethereum competitors, but because of the interoperability emphasis, I think
They could coexist.
yeah, coexist in a really healthy way. Yeah.
As far as Binance being a Chinese national company, I actually don't know.
Binance.
I know very little about Binance.
Binance. So CZ from Binance, he is Chinese, I believe, and I think it was started off in China, and then they moved their headquarters, and they're in like
It's
they're
like UK or something, isn't it?
not the UK. They're
Let's
somewhere
look it up.
in the Mediterranean, I thought. But Binance has done some cool things, and they've invested in DeFi protocols. They invested in FTX, which is another centralized cryptocurrency derivatives exchange, and I have no hate for them, but they're in Malta.
They're in Malta. Wow.
Yeah, so Binance, they've come under some scrutiny from both the U.S. and some other countries, and so they've been kind of um, I think they were headquartered in a place, and they're only operating in certain places in order to try to not get in regulatory trouble. U.S. regulators are still mad at them, even though it's weird because they're not in the U.S. anymore. They pulled out of the
Hmm.
U.S., but there's a little bit of drama there.
Interesting.
Yeah, it's illegal. Interesting. Uh,
So, Zerg, are you saying that New York has banned the purchase of SafeMoon specifically?
or is it crypto? I didn't know about any New York. Um, huh. Interesting. So yeah, SafeMoon. I had heard about it, but it was actually Zerd Crypto had messaged me about it recently, so I decided to look and see what it is. It's a Binance Smart Chain.
Yeah, there's heavy volumes on PancakeSwap for SafeMoon, right?
Yeah, PancakeSwap is like the biggest decentralized exchange on
BSV.
Binance Smart Chain. Yeah, and then yeah, and SafeMoon's a big. It's kind of a viral token. Um, uh, yeah, SafeMoon's interesting. So I feel like in my quick thought on these different tokens is there's kind of like there are a few different like simultaneous movements that are all happening within crypto. One is like decentralized finance and the things that Ethereum and Bitcoin are doing. They're like creating new industries and transforming the world in a really positive way. Um, and then there's this other thing that like a lot of the dog coins, like Dogecoin and Shiba and these, and that is a different movement that's more about it's like a more fun version of the lottery slash it's like kind of financial populism and kind of like meme culture and people trying to catch the meme. And there's been a bunch of that, and that space I don't play as much in. And SafeMoon, I feel like, and and you might disagree, Zerd Crypto, but I feel like it feels a little bit like SafeMoon kind of started off as more on the meme side, but they're trying to do things to actually create real value. So if I remember right, they're like building a SafeMoon wallet, and they're building. So they're trying to build out some tools and things so that they're more than a meme. Um, and
I haven't seen much about that.
yeah, so I do not know a ton about SafeMoon. This is like very surface level. So um, but yeah, my perception is that when it first launched, it was this asset that kind of caught the meme, kind of like Dogecoin and Shiba, and then it went up a lot in value. But there wasn't like, like Maker token is associated with a lending protocol, and so there's like, okay, there's clearly this thing it's doing, generating revenue and solving a problem. And I think when SafeMoon first launched, there wasn't anything like that it was doing, and it caught the meme, and it's like, okay, we should do something of worth
Yeah.
now. Um, yeah, see, so Zerd Crypto sounds like you agree that SafeMoon, they have kind of a roadmap. They have some things they're building out, trying to contribute to the crypto ecosystem. But yeah, they're in the Binance Smart Chain ecosystem.
Which is good, right? You'd like to see, obviously, if you're buying into a token, it's better to buy into one that has a roadmap and that you've come to believe in the development team and are able to uh, get behind the cause, right? So
Yeah, I mean, the meme coins, it just serves a different purpose. Like if you're some person who likes buying lottery tickets and you're like, I want to try and buy this random dog coin and see if it goes crazy. I have no hate on that. It's just that's not really where I tend to have interest personally.
right, right.
And I'm not saying that that's what SafeMoon is, but I'm just saying even the meme stuff I have no hate on. It's just a different thing than what I'm interested in.
Yeah. So I think we're going on 2 hours here. I think this is probably a pretty good point to end our stream. But before we do that, I just wanted to let everybody know that we have started a YouTube channel. I'll link it in the chat. We plan to post. The reason that we have the actual Twitch chat visible in the stream is to make it easier to consume our content on YouTube, where you can follow the conversation and you can see, oh, uh, we're answering this question that's on the screen. And so just wanted to point out that this is the direction we're going to go. We're also looking into taking the audio from some of our live streams and videos and porting that over to a podcast format. I haven't done too much research into that, but I think it could be another great way to spread crypto knowledge. But if you could, like our video on our YouTube channel, we have our first episode up there. Watch it if you're interested in getting some more of the basics that we talked about in that video. I'll be uploading episodes 2 and 3 hopefully within the next week, and then we'll have kind of a cadence where we have a CryptoNITE episode every Thursday at 8:30 Mountain Time, and the YouTube release of that episode within the next 48 to 72 hours. So that's kind of our plan. One thing that is on deck for discussion and for building out is also our own Discord server where we can continue the conversation outside of a live stream, and would become easier for notifications for videos and for streams as well, and also would perform a really important function in that it would help inform Rhett and I about the type of content that would be the most beneficial and most valuable. And we're really interested in that knowledge. So, drop some comments on our YouTube video, send us messages in Discord. It's currently all of our chatter is in a separate server that I use for my gaming channel. So we'll try to roll that into its own Discord server, and there we can host some of our tier lists or I don't know what else to call them, I guess.
Yeah, a list of like, hey, here's Twitter handles to follow, here's podcasts to follow,
exactly. Here's books you might want to read,
articles, etc. And I just want to say I really appreciate the feedback we've already received. Like for instance, Matterhorn gave me some feedback about how it would be useful to have some more visuals. We did a little bit of that today, and we'll try and hone that in more in the future.
Absolutely.
Would love any feedback from any of you. We just want to we're trying to create something useful if we can. Um, so yeah,
Yeah, and also probably the final request that I have is, a lot of the people who we have here are very interested in crypto already. Um, and I know a lot of other people that that are not in the ecosystem are wondering, right? And we're really trying to get our message out to those people. So, you know, if your parents have started talking about crypto, refer them to our live stream. We'd love to help educate them, help them get into crypto as well. You got friends, coworkers, family, anybody who has demonstrated an interest in learning more. Please let them know about our live stream. We're going to continually upgrade um, what we're doing. Right, we're currently in an unfinished basement, and it's a little bit of an impromptu setup. I have big goals about that. I'd like to stop seeing the my chair go in and out of existence here because of the workarounds that we're using to blur the background. So,
yeah,
we really are just getting started in the basement. Um, we plan to turn it into something much more professional, much more helpful, and hopefully get much better at delivering our message over time,
yeah.
and
Working on
and
that.
and help people learn about crypto.
Yeah.
So
One point about, if your parents are talking to you about crypto, or some, friends or coworkers that don't know much and they're asking you questions, definitely invite them, like Phil said, but also let us know what questions they're asking. Let us know, hey, this topic would be helpful to cover, or I'm getting this question. You can let us know beforehand or in the chat. Would love to answer anything.
yeah,
Um,
absolutely.
or give our opinions. Yeah.
But aside from that, lastly, really, really appreciative of all of you coming out. Um, Rhett and I talked about doing this for a while, and it's always a little bit scary to decide to put yourself out there and to go live. So, and especially for me, where it's definitely out of my comfort zone, I don't consider myself to be a crypto expert. I'm really, really grateful for the support, and I'm looking forward to learning a lot more and passing that knowledge on to other people. So, Um, with that, I think we will shut it down. Let's get our music going again. Quick shout out to Project Stream. Maxwell CI was in the chat earlier. If you're a streamer, take a look. You can find them on Spotify, Apple Music. Project Stream, PROJEKT, Project with a K, Stream, and it's music you can play on your stream without any fear of copyright strikes, and it's really providing a really valuable service in 2021 for live streamers. So thank you, Maxwell, and thanks everybody for the awesome questions. Hopefully we'll see you on YouTube, and we'll see you next week on Thursday at 8:30 p.m. Mountain Time. Anything else?
Yeah. No, thank you. Appreciate you all coming out.
All right. Have a wonderful night, everybody.